Welcome back, TTM Trades. All right, so our last post we talked about 391 being resistance, 384 being support on the intraday chart, and as you can see, we broke that 384 support. So we're gonna do another top-down approach on the ticker SPY, and what I expect to happen here in the near future as far as moving forward towards the end of the week and going into next week. So looking at the weekly chart on the right side, that top one standard deviation Bollinger Band is still holding, currently sitting at 379.50. So we'll just say 379 to 380. And that has been holding, like we said, ever since October of 2020. A violation of this top one standard deviation Bollinger Band leaves us room to come down here to that middle BB, which is currently sitting at 359. All right. So 379 to 380 down to a 359 to 360 drop is about a 20-point spread. So this is a very important line of support to hold. Now, moving over to the daily chart, looking at bottom one standard deviation, Bollinger Band, which needs to hold, because if we break it, then that sets the daily chart to go into a downtrend on a day-to-day basis. It's currently sitting at 380 also, which correlates with the weekly top one standard deviation. So very important support level to hold. All right, shifting the daily to the right and bringing a 2-hour chart to the left. Now, just looking at this daily chart, if you just look down here at this volume, all right, from February 17th all the way to now, March 3rd, it's been a lot of red days, all right, and it's looked like a lot of shares are being sold at this level. A lot of people are getting rid of shares at this particular level right here before the drop. All right. I do not think we're going to go on an uptrend here anytime soon. The 400, we may get a slight bounce right around this 380 level. And if it's a decent bounce, it may be a slight bounce from 380 up to 385 with this middle Bollinger Band is sitting at for a rejection. And then we would probably start that downward trend. All right. But as far as trying to get back in the uptrend, we've been rejected on too many levels. So as you can see, we pulled back here. We ran up to that top one standard deviation. The following day sold off and closed below it. And then again, we ran up to that one standard deviation, tried to get back above it, sold off, and now we're closed below it on 2 days. All right. So I do expect a possible bounce up to the middle Bollinger Band sitting at 385 for a rejection for the selling to finally start and push down to that. And this is a pretty extreme level. Okay, we won't say we're heading down to that 357 to 360 range just yet. But again, if we lose that 380, then that leaves us a lot of room to fall, with the 374 being that last line of support, with that bottom 2 standard deviation Bollinger Band is currently sitting at. All right, so that 374 area would correlate with this area of consolidation here, and would also correlate with this area of consolidation here when the price action finally broke out above it, came back and retested it before it started its new high. So 380, we lose it. 374 is in the works for the next line of support, but 380 is very important. Now, just looking at the daily chart, all right, looking at the RSI, it is starting to trend downward, right? We fell below our averages, attempted to get back above it, rejected, pull back here, try to rally back above the averages again. As you can see, that momentum in reference to the price action isn't very strong, and now we are pulling back down. Okay, now 40, 50, and 40 are very important levels to hold, and as you can see, currently where we're sitting at, right at 51.90. From 51.90 down to 40, there's a lot of room for this to drop, which will correlate with this drop here. So a lot of room to fall as far as ticker SPY goes. And now, even looking at the PMO has fully crossed over below its short-term average, and now its long-term average. And just looking at the width of this momentum as the PMO points downward shows that there's a lot of selling in play, and that this momentum could possibly continue to the downside on the PMO. So me as a trader, if I was going long, I would not go long while the PMO is turned downwards like this. All right, I would anytime I take a long position, I'm looking for the PMO to be turned up upwards to show some momentum to getting above its averages, and then I'll take a position anywhere in this upside momentum above the short term average here. All right, even looking here. All right, and then this upward turn and this momentum above the short term average is a beautiful time to lock in the price action and ride it all the way up to the upside. But right now, if you look at the daily chart, that PMO is turned downwards. And then just looking at the Bollinger Band with you can see the volatility is subsiding and the price action is kind of going into this range of 391 to 380. Hence why the Bollinger Band with is starting to fall below its averages to show that the bands are beginning to constrict. And again, where there's low volatility, high volatility will follow. So there is a breakout or a breakdown here right around the corner pretty soon. All right, and that's for the daily chart. We'll slide the 2-hour chart over and bring up the 30-minute chart to the left. Now, looking at the 30-minute chart. Why I'm on futures. Let me go back to SPY. Same setup. All right, so just looking at the 30-minute chart. All right, in our last post, we said that this 387 level was key to hold, right? And if we lost that 387 level, then we had that 384 level that was sitting right here at the time on the bottom one standard deviation on the 30-minute chart. So you can see the price action begin to fade here on the 30-minute chart. And as it pushes up into that 150 SMA, price actions get rejected on 3 different occasions. And we tried to hold that, that not we, but the price action tried to hold this 387 level and failed it dramatically, and pushed straight through 384. And then you can see it tried to bounce off of that bottom 2 standard deviation to get back above that a bottom of 1 standard to come out of this downward trend that was starting to happen. And you can see as it pushed back up into that bottom 1 standard deviation, immediately got rejected, and the price action began to start selling off and slide into a downtrend. Hence the PMO turned downwards, and you can see that the volatility is beginning to pick up to show that this bottom side breakdown here on the 30-minute chart is picking up some speed. Now, looking at the 2-hour chart and just looking at the 150 SMA, normally we hit the 150 SMA, get a nice clean bounce of it, and start our trip back to the upside to start a higher high. But as you can see here again, we got that bounce off the 150 SMA, dip below it, and then we got to bounce to the upside to start this upward momentum. So looking at this one, hit that 150 SMA, a lot of selling volume, slight buying volume, not that much. We got that run up to the upside once the stimulus bill got approved, but it wasn't enough momentum and or buying power to get it back above its top 1 standard deviation. And then we got rejected, and immediately we started selling off, as you can see here. So even on the 30-minute chart, you can see we've been in this bull territory the entire time. Now we're in bear territory, hence the red background, and kind of struggling to get back above that 0 line. And the price action is kind of choppy up down as we consolidate on that daily chart, as I said, between 380 and 391. But again, looking at the 2-hour chart, we haven't been in bear territory for quite some time. The last time we was in that bear territory was October 2020, when we had the strong dip, in September of 2020 when we had these 2 dips right here that were pretty deep. For the most part, ever since then, we've been in a strong uptrend, holding above the 150 SMA and not really violating it. But now, as you can see, the PMO is pulling closer and closer to that 0 line, and it looks like we're about to dip back down into bear territory, which we haven't did in quite some time. Which means that we're going to fail this 150 SMA and probably start that sell-off, as we talked about, and break that 380 area and push down to this 374 range. And if we lose that 374, as we pointed out here on the daily chart, sitting here at that bottom 2 standard deviation, then that leaves this wide gap for us to go from 374 down to 360 to 355, which I'm seeing a lot of people call. So personally, I wouldn't take any long plays on ticker SPY. If you're looking to make an entry, I'll possibly look for a bounce at the 380 level going into tomorrow. We push 380, hopefully get a slight bounce back up to 384 to 385. Once you see that bounce and that momentum fade, that'll probably be a good time to try to lock an entry in as far as puts or shorten it or whichever one you plan on doing. But you can see that downward momentum on the 2-hour chart is continuing. And normally when a breakout to the upside or a breakout to the downside uh, starts to consolidate to show that a possible reversal is going to happen, you'll see the price action consolidate like you see here to this breakout to the upside. When that breakout to the upside started to slow down, you can see the price action start to consolidate in a specific price range, hence the bands consolidating and the Bollinger Band width falling below its averages to show that consolidation. But then we got the strong breakdown outside of this consolidation range to the downside. You can see that the volatility as far as the bands beginning to expand is beginning to pick back up, and it hasn't fallen below its average to show that the price action is trying to consolidate and hold in this general area. But it looked like it's picking up, and the volatility is about to get even more extreme as this price action breaks downward to the downside. Now, just one more thing to look at, and we'll close this out. Let's look at the VIX. I mean, the VIX has definitely a very strong setup here, which trades counterintuitive to the SPY. Right, as the SPY begins to fall, the VIX will rally to show that there are a lot of puts being bought as far as hedge fund managers hedging their portfolios. And if the S&P 500 is rallying, you'll see the VIX drop to show that there are a lot more calls being bought into the market, and that the fear gauge, also known as the VIX, will continue to drop as the S&P rallies. But as you can see here on this setup, just looking at the daily setup, you'll see that the VIX momentum is beginning to pick up to the upside. Right, it dipped down in this bear territory. Matter of fact, I'll pull up the SPY here on the left side so we can get a better view. But we'll pull up a daily chart of the SPY and a daily chart of the VIX. But you can see here the last time that the daily chart began to pick up momentum was back in September of 2020 and October of 2020, when you can see the VIX, the PMO start to cross over to show the momentum to the upside of those puts and that fear picking up in the market as far as volatility. And that's when you got these two dips right here. Let me show you. So you got that spike, and then when the price action started to drop, you can see that the VIX started to spike to the upside. All right, and then when you got another rally, you see the VIX dipping, and then as the SPY begin to sell off again, you can see the VIX spiking back to the upside. So now looking here on the VIX, you can see that momentum is picking up, and then that sell-off we had late January, early February, right here, you can see the VIX spiked on this small sell-off here. And now you're beginning to see that this momentum is picking up even stronger. Like the PMO didn't cross downwards to consolidate a little bit and then pick back up. The PMO is still above its short-term average, and it's starting to pick up tempo to the upside as far as showing the VIX picking up speed to the upside. So as the VIX is picking up speed to the upside, you'll start to see the SPY sell off. Now, if we drop down to the 2-hour chart on the VIX and ticker SPY, even looking at the PMO setup here on the VIX, you can see mid February, you can see the VIX starting to pick up momentum here, and at the same time, the SPY was losing momentum. You can see that a lot of hedge fund managers was hedging their portfolios with puts, and as the VIX is picking up momentum, you can see that the SPY is beginning to get very volatile, and it looked like it's going to sell off to the downside. So again, just looking at the VIX intraday 2-hour chart, had the slight pullback here on the VIX, hence the small rally on the S&P 500. And you can see the VIX is still above its long-term average, and it's starting to cross back over to show that the momentum to the upside is probably about to pick back up, create a higher high on the VIX, which will cause the ticker SPY to dip much lower and start to sell off. But you could just look at the inverse of the two and kind of see what's going on. But just looking at this, which one has the stronger setup? And quite obviously, that's the VIX. The VIX has a much better setup as far as momentum to the upside, and the PMO constantly picking up, and the RSI holding above that 40 area and crossing back above its averages to continue upward. All right. And if you look at ticker SPY on the 2-hour chart, this setup is very bearish. As you can see, the PMO is losing momentum and starting to drop down into bear territory below its averages, and it's going to dip below that zero line. And you can see the volatility on the ticker SPY beginning to pick up and probably about to spike back up to the upside. So I definitely would not be long right now on ticker SPY. I would look to lock in a short position right around 384 if you do get a small rally, and then take this one further to the downside, possibly to 274. In worst case scenario, 374 in worst case scenario, that 360 area if we get a strong sell off for a market correction. Other than that, TTM trades, I'm out.